Well, Trump's big, beautiful bill has passed the Senate. It now goes back to the House where it'll probably pass with maybe some minor tweaks. And it is certainly big. It's a thick boy. It's like 850 pages, an absolute unit. And while there might be some changes in the House version, I think that what we have here, the most recent Senate version, will probably be the thing that gets signed into law in the next few days, if not by the time I put this out. So I just want to go through, rather than the entire bill, just like the top 10 tax provisions that are probably going to be of most interest to the majority of people. I know there's a lot as it relates to Medicaid and food stamps and energy, and I'm not going to touch any of that. Really, I'm just looking at the most common or the most applicable tax provisions. Starting with number 1, the Trump tax cuts being made permanent. So our current tax brackets were set to expire at the end of this year, and we're going to go back to what they were pre-2018. So like, I don't know, 3 to 4% higher for most people. So these were made permanent. Our current tax brackets, they're going to stay in place. Really, I mean, no changes there. The income amounts get adjusted for inflation every year, but those tax rates are most likely going to be made permanent, along with the standard deduction, which was set to get cut in half at the end of this year. That has been made permanent as well, and it will be adjusted for inflation moving forward. The estate and gift tax exemption is also made permanent, and the qualified business income deduction was made permanent as well. That was set to expire at the end of this year. A lot of business owners, you may not even be aware, but you get a 20% deduction on your net business income. And that deduction has been made permanent as well. And they adjusted the income thresholds on that. That looks like that will not be expiring at the end of this year. And number 2, the other big thing is the state and local income tax deduction. That cap was set to be lifted at the end of 2025. It's currently $10,000. So if you are in a high income tax state, you can only deduct $10,000 of state income taxes on your federal tax return. That income cap is going to remain in place, but it's going to be lifted from $10,000 to $40,000. That's not permanent. That will actually go back to $10,000 in tax year 2030. Number 3 is the no tax on tips. Not entirely a no tax on tips. What this does is it essentially allows workers to deduct tips from taxable income, and that is capped at $25,000. And then it'll decrease for anybody making over $150,000 for those who are filing single, $300,000 for those filing married. But this is not permanent. This is only in place through the end of Trump's term. So from 2025 through 2028. That leads me into number 4, which is no tax on overtime. Very similar. This is allowing workers to deduct a portion of overtime pay from their taxable income. That deduction is capped at $12,500, $25,000 for married couples filing joint, and then the income threshold is similar, $150,000 if you're single, $300,000 if you're married. So if you're under that, you'll be able to take this deduction. But again, this is not permanent. This is only in place from 2025 through 2028. That leads me to number 5, which is not really what was at one point proposed, which is no tax on Social Security. Essentially, this is just an additional $6,000 deduction for seniors making under $200,000 per year. Again, not permanent. This will be in place from 2025 to 2028. Number 6, another thing Trump campaigned on is the auto loan interest deduction. This was in the bill, and this is a deduction, an above the line deduction, meaning you can take this even if you don't itemize your deductions. So like with mortgage interest, you can't deduct that unless you itemize. With this auto loan interest deduction, you would be able to take this even if you're just taking the standard deduction. This is a maximum auto loan interest deduction of $10,000 for loan interest on new vehicles that undergo final assembly in the US. And this also will expire at the end of 2028. Number 7 is above the line charitable deduction. So another deduction for people to take who are not itemizing deductions. Typically, charitable deductions are limited to people who itemize. This charitable deduction will be $1,000 for people who are single, $2,000 for people who are married, and that is an above the line deduction. So even if you take the standard deduction, you can deduct at least some charitable contributions. And this will be made permanent, but it doesn't start until tax year 2026. Number 8 is the child tax credit. So this is being bumped up from $2,000 per child to $2,200 per child starting in 2026. And this will be permanent as well. The $2,000 amount per child was set to expire at the end of 2025. So they're keeping that higher amount. It was, I think, half of that before. And then moving forward, this will also be adjusted annually for inflation, which was not previously the case. Number 9 is an interesting one. These new accounts called Trump accounts. And so it's a new tax advantaged accounts, savings accounts for children with essentially a government contribution of $1,000 per child born, I believe it's between 2025 and 2028. Essentially what it is it's like an IRA for newborns, not a Roth IRA, more of a traditional IRA. I don't believe the contributions are taxable, but the earnings will be taxed upon distribution. And obviously, you don't have to have earned income for this like you do with an IRA. So it's designed to get kids started saving early and build up some investments. More to come on that. We'll see how that pans out. And then finally, number 10, this applies more to business owners, but 100% bonus depreciation was brought back permanently. This has gone back and forth over the number of years and varied at different percentages, but essentially this allows you to expense 100% of the cost of a qualified property that was put in place in 2025 or later, as opposed to depreciating it over a number of years. You can accelerate the cost of that and take write off the whole cost of it in the year that it's placed in service. Kind of to go along with that, research and development expenses now can be immediately expensed beginning in tax years 2025 and onward, instead of amortizing that cost over a number of years. So that applies more to business owners, but it is a big one. And then I do want to add one final bonus that is going to impact a lot of people watching, and that is an increase in deduction for Alaskan whaling captains. So this increases the max deduction for whaling-related expenses from $10,000 per year to $50,000 per year. And I know my Alaskan whaling captain clients will be thrilled to hear that. So congrats to y'all on that. That's, I think, the big ones. There's just so much in this bill. Like I said, it's, I think, 850 pages. So more to come, and we'll see if this gets signed into law.